Hi everyone, it's Ryan here with another episode of Blockchain Markets. And today is really interesting because we're going to talk about crypto funds and the adoption by big institutions and how is that going to happen. So today I'm today here with Gerrit, who is the co-founder and CTO of Caspian, and he's going to tell us all about how they look to be or they want to enable all these asset managers and institutional money to start investing as well into crypto. So welcome, Gerrit.
Thank you, Ryan. It's good to be here.
Yeah, I was thinking that maybe just to start, maybe you can introduce yourself, and then we just
Sure.
go to and start talking about Caspian.
Sure, absolutely. So my name is Gerrit Van Wingerden, and I've been working for a firm called Tora for about the last 14 years. And Tora makes basically a trading platform, a cloud-based trading platform for institutional investors, primarily for hedge funds. You see?
Yeah.
Hello. And about over a decade ago, and our clients are, as I said, primarily hedge funds and also some prop desks. And what our system, obviously we're still talking about the non-crypto system. Our system allows hedge funds who want to basically trade to equities and equity derivatives on any exchange on the planet. We provide sort of one unified interface for them to do this. We also have a set of tools which allow them to sort of manage their risk and their positions in real time, and also have compliance functionality. And then I'll talk a little bit more about what that means later on. So we've been quite successful in business, especially in Asia. About 17% of all institutional Japanese trading volume flows through our system on any given day. We have similar smaller percentage, but still significant percentages of market share in other Asian markets, and clients who trade, every market on the planet. I myself have sort of been into crypto since 2013. Have been what I would call an amateur quant. Have been writing market making algos for crypto. Started in 2013. So I've always had an interest in crypto. And what we noticed sort of last year is that a number of our clients expressed an interest in adding crypto as an asset class to our platform. And we also had a number of sort of users at clients of ours who sort of left traditional hedge funds where they were trading stocks and options to start their own crypto funds. And they were looking for a set of tools to enable them to trade crypto in the same way that they traded sort of equities and other assets, and manage their risk and manage their P&L. By P&L, I mean basically profit and loss, the amount of money they're making, in the same way that the similar set of tools that they had in the non-crypto space, and really realized there was nothing out there for them. And so they asked us, would you be, considering adding crypto to the platform? We thought about it, and at the same time, we were approached by a firm called Kinetic Capital. Kinetic Capital it's very well known in at least in Asia, sort of in the crypto space. They do a number of things. They have a very good advisory business. They run a number of crypto hedge funds. They have an OTC desk, and they've been extremely strong sort of in community building in Asia. Jahan, who's the managing partner, has sort of been a driving force behind sort of the Ethereum community in Hong Kong, and has been into crypto for a very long time. And for their own use, they had a similar vision that they needed to have an institutional platform. And I'll tell you why an institutional platform is important in a second to trade crypto. They had thought about building it themselves from scratch. But then their COO worked for a former client of ours and said, hey, before we build it from scratch, we should talk to the guys at Tora because they have a really good platform. Maybe they would consider adding crypto to it. The timing was perfect. We were thinking about adding it. They were thinking about building it. We realized that we didn't have the breadth of contacts in the crypto space that the Kinetic folks have. And so we decided to partner and form a joint venture, which has become Caspian. And the sort of the goal of Caspian really is or the thesis behind Caspian is that before institutional money can come into the space, they'll need a number of things. And I would say the most important things are institutional grade tools, proper custody solutions, and regulation. Now, we don't deal with custody, although we will be announcing a number of partnerships with people who offer very good custody solutions. We do provide a set of tools they need, and with the regulation, we see the regulation is coming, but when regulation comes, there will be a need for institutions to remain compliant with that regulation, and that's part of the one of the value propositions that we have is that we provide tools which allow you to which enforce compliance with regulations, and so that's sort of the genesis of Caspian.
Well, that's very interesting because that you're right. I mean that's something that we see in the blockchain space, in the crypto space, that it's very much retail oriented until now. And then the main reasons why institutions are not in is what you mentioned, is regulatory aspects, but also custody. I don't see a big institutional or pension fund with just carrying everything on a hard wallet, and so that's key.
Exactly.
Maybe we can
or not only will they not just keep it on a wallet. Okay, go ahead.
Yep.
Go ahead.
No, just.
I was going to say, they won't have it on a wallet, or they won't leave it. They won't leave all their funds on an exchange either, right?
Exactly.
Because it seems like every few weeks, even very established reputable exchanges are getting hacked, and so that's why the custody piece is very important.
Yeah, definitely. Maybe for just to get it more concrete, maybe we can show an example on how is it today. For example, then let's say I'm a fund manager, I manage a crypto fund. How does it look today for me, and how does it look with so before Caspian, and how does it look with Caspian?
That's a great question. Okay, so the way it would work today is that, there's different strategies, for example, and there are funds which are doing. A lot of the funds traditionally have been sort of arbitrage funds, because that's where there was a lot of opportunity and there's a lot of low-hanging fruit. I expect that many of the arbitrage opportunities are going to go away. But let's just start with typical an arbitrage fund. What they would have is they would typically not execute manually. They would write their own bots which connect to exchange APIs. And for these guys, sort of the execution piece is okay, right? But most of them then, when they want to figure out which strategies are making money, for example, or what it means, and figuring out how much money you're making is not sort of the price at which you want. It's very likely that you, at least to short, you're either borrowing crypto or you're trading short on a swap, right? Or you're trading short margins, so you're going to have finance. So you are borrowing to buy, also borrowing and selling twice as much. And so you've got financing costs as well. And if you really want to figure out if you're, how much money you're making, if you're making money at all, you have to take your finance costs into account as well. And you may have sort of multiple strategies. You might have the simple XYZ arbitrage strategy, or you may have a sort of a mean reversion strategy, which I guess isn't really sort of an arbitrage strategy, and you want to track how much money you're making, losing in all of these. Well, right now, most of the funds, the Python piece, they might have implemented it, but they're trying to keep track of this P&L on spreadsheets, right? And some of these calculations, like the funding calculations, are non-trivial. And that even might be fine. But now let's say you've been pretty successful as as an arbitrage fund. You've had your own money. Let's say you got into crypto early. You've been trading your own money, but now you say, I want to get external money. I want to scale up. What's going to happen is the investors, they're going to have a checklist, right? And they're going to ask you things like, how do I make sure that my bot doesn't blow up? Right? What if your bot goes crazy, right? They're going to ask you things like, well, how do you know how much money you're really making and losing? Where do you track it? And if you say, well, I rely on my developer to make sure that the bot doesn't go crazy, and I have a spreadsheet to track my P&L, they're probably going to pass on that investment, at least if it's someone like a sovereign wealth fund or a fund to fund that comes from a traditional background. So with a suite of tools like ours, right, you can still keep your bots, right? But one of the things, but it's what you can do then is you can use our pipes to get to the exchange. And so what that will give you is it will give you, and between the exchange and your bot, we have a compliance layer. So we have an independent set of checks to make sure that you don't blow yourself up, right? To make sure that if your bot goes crazy or there's a bug in it, that there are certain restrictions that can be placed. The other thing is, then when you trade through the system, all your trades are going to flow into our position management system. And our position management system then will not only, it'll compute your P&L, and it would also reconcile your positions with the exchanges. So the positions you think you have, you really have. And that's a very key piece. This position management system is going to be very important for sort of these outside investors in checking the box. We have, one of the largest banks in the world in Japan. Well, it's a Japanese bank, and their institutional securities division, all their proprietary trading uses our system for maintaining and tracking their P&L. They're not trading crypto; they're trading Japanese futures and equities. We also have some very large hedge funds, right, that have significant outside institutional money invested in them that are using the system. And so it's a proven system. It's good enough for large banks. It's good enough for large hedge funds. So I think that it should help check the box for the fund that's done pretty well with their arbitrage strategy that now wants to scale out and get outside money. That's just one example. If you're not executing bots, right, if you're trading manually, there's many other advantages as well, because now you have a human element. It's probably even more important to have this compliance piece, right? If you have 40 traders that are part of your fund, you might have a junior trader who has certain risk limits, and you want to have a senior trader sign off on large trades. We have all this functionality. And then when regulation comes into the market, I think it's going to be even more important to have a system like ours, because this is maybe this is sort of an obscure example. It's an example of in the non-crypto space of the types of regulations that you might see. In that, like in Japan, for example, if you were going to short sell a stock, right? So if you were going to borrow shares and sell the stock, and you sell more than 1/4 of 1% of the outstanding float, the shares of the stock, you have to report that to a regulator, right? And so and this is an example of one of hundreds of rules that exist and across multiple jurisdictions across the globe that the Tor's existing user base has to comply with. And I would expect that in crypto, as there is regulation, there will be similar rules, right, that evolve, and that funds want to make sure they're compliant with them. And we have a very mature based compliance. Define both human traders and auto traders are compliant with the regulation. So this is something that I think is even more important in the future.
Yeah, no, definitely. And I was thinking, on which stage of the whole project are you guys now?
So we have about 15 funds right now that are live with the platform.
Mm-hmm.
So what we've done is, I think we have competitors in the space, and I think there's two approaches people are taking. One approach is let's build everything from scratch for crypto, and that's the approach that most of our competitors are taking. Now, these competitors, some of them, they have a strong background in finance. They have good teams, solid advisors, but they're starting from scratch. We've taken the approach where we just view crypto as another asset class, right? When we first started the platform, we only had one asset class. It was Japanese equities. And we added, we added futures, we added options, we added FX. And we see this sort of as just adding something to a mature system. Certainly, there were things that were crypto specific. For example, there's no other asset class that has the concept of a Satoshi, where you have to have eight decimals of precision, right? And so we had to, touch everything in the system, but still making that change is far easier than building a system completely from scratch. So we have, arguably a 10-year lead on competitors who are building things from scratch. So we have a fully working system. We have integration with about 20 exchanges. We have a smart order router that's available. We have a basic algo suite that's available. And so we have everything right now. We have about 15 funds that are using it. We have about 150 sort of people in our basically qualified leads. And the other thing that we have that, I think people that are building things from scratch don't have is we have a mature and robust support organization that's follow the sun. We have a large support desk in Japan and also in Hong Kong that cover Asia. We have a large support operation in Europe, and we also have support operation in North America that we're scaling up. And crypto is 24/7, right? And I always like to point out that our support desk is larger than the development teams of pretty much every one of our competitors. So even if you have so not only do we have a mature product, but we also have a mature support organization to support it, and that's very important.
Yeah, especially if you're in different time zones, so you want to get support in your own time zone.
Exactly.
The other thing that you mentioned within the sphere of regulation, of course, until now, the majority of the crypto funds are investing more into Bitcoin, Ethereum, more the utility tokens.
Right.
And from as long as we get a regulation, then more security tokens will come in. Is that something that you guys thought as well for Caspian?
Yes, absolutely. We will support trading security to come online. We will, it's even more important to have regulation, right? Because trading for security tokens is going to be even more restrictive, right? Not that than trading of utility tokens would ever be, right? For example, like who you can sell the tokens to, right, is going to be very important, less important in the case of utility tokens. So this for us is, I think it's an opportunity for the whole space, because I do believe that in the vision that, everything is going to become tokenized in the future, whether it be, private equity or rare wine or art. I do believe that's a real possibility. And I think that, and some of this will obviously be in the form of a security token, something like private equity, for example. And this creates an opportunity for platforms like ours, because there's going to be more regulation, more restrictions on how you can trade it, and we're prepared. We're prepared for that.
Interesting. I saw that on your website as well that you're running now the token sale.
We are doing a token sale. We have a utility token around the platform, and I have to be careful about what I talk about, because it is a token sale, and depending on the jurisdiction, right? Users can make. There are certain jurisdictions where we're not able to offer the token. So I would encourage people who are interested in the token sale really to go visit the website and look at the white paper. I do think that we have a very compelling utility for the token and a very compelling use case for the token. And I would encourage anyone who's interested in the token sale to go to the website.
Perfect. So what's the URL of the? Is
Caspian, like the sea, or it's actually, we're named after the tiger, because tiger in Japanese is Tora. So Caspian is also an ocean, but it's also in a type of tiger, and we're named after the tiger. So it's Caspian .tech.
Perfect. Caspian.tech. I'll leave it also in for all the viewers in the description.
Great.
Link from there.
Sure.
Yeah, I think we covered almost everything. I don't know if there's anything else you would like to mention, something that we didn't discuss yet.
No, as I said, I think that, one question that we often get, is our focus right now is really on what we call institutional and sophisticated investors, because that's our background, right? Our background is not building a retail trading platform, as important as I think retail is to the space, and that's the niche we're trying to fill initially. But I often get the question, as a retail investor, why should I care about your project, right? And the reason you should care is because if you're asking the question, you probably have some exposure to cryptocurrencies or an interest in cryptocurrencies. And what will happen is, if we can enable, if we can allow institutions, or help to large institutions to come into the space, right? That's going to be bringing a huge amount of money into the space, right? Let's say you take, sovereign, just pension fund money, even like a few basis points of all pension fund money, right? It'll be an enormous amount of influx into the space. And that the only thing that can happen, in my opinion, is that, prices have to increase, right? And so that's what it means for the non-institutional investor who's interested in the space. And I think another area where it might be relevant is, I'm a firm believer in that DEXs, decentralized exchanges, will become important in the future. And we will there are issues. Good. So take it from last notes. Any last thoughts, or what was the question?
Yeah, the last thing you were mentioning is you were mentioning about institutionals coming into and
Sure. Right. So one other thing, we often get the question. We are focusing on institutional investors, and it's not because we think retail investors are not important to the space. Obviously, they're extremely important, but that's where our background is, right? And so the question I often get is as a non-institutional investor, as a sort of an individual who's a participant, is interested in crypto, why should I care about Caspian? Why isn't Caspian important to me? And the answer I would give them is, I assume that as an individual who's trading crypto or has an interest in crypto, you probably have some exposure to crypto as an asset class, and you probably have some holdings in crypto. And if Caspian can do its part, along with the custody providers and the regulators, to sort of help get institutional money into the space, right? Even if a very small fraction of institutional money, say, a few, 20 basis points of pension money comes into the space, right? That will be massive. It will be a massive inflow of my funds. And the only thing I can see that happens when that occurs is that the prices of crypto have to go up. And I don't think any individual person, crypto investor will have any issue with that, right? They should be happy about that. And the other area where, we're pretty excited about is sort of decentralized exchanges. Obviously, there are some they don't have the trading volumes centralized exchanges have right now. I think there are a number of reasons for that. One is sort of scalability issues with the blockchains on which they run. I think those hopefully will be addressed. There are a number of initiatives sort of in Ethereum to address scalability. There are also a number of other interesting blockchains out there, so that even if the Ethereum ability, scalability issues are not addressed, these other blockchains might be, sort of prime targets on which to run decentralized exchanges.
Mm-hmm.
And the other is sort of KYC and AML. At least for institutions, they need to know who they're trading against. And right now, most decentralized exchanges, the counterparty is anonymous, which makes it very difficult for, impossible for most institutions to trade on decentralized exchanges. However, this is something that's being addressed by the exchanges, and there are exchanges who are now giving you the option, right? They're KYCing participants who want to be KYC'd, and then they're giving you the option of trading, with anybody or with KYC participants. And when that happens, I think when these two things happen, you'll see a pickup in volume in decentralized exchanges. And I think, we will embrace decentralized exchanges. We will connect to all the important decentralized exchanges. And I think we will then be in a position to drive liquidity to decentralized exchanges. There's a number of ways we can do that. One example would just be through our algo suite. And if, for example, when you're executing an order in an algo, well, there's a number of reasons you would do that, but in one case would be you have a large order that you want to execute, and if you execute it right away, then it's going to impact the market. So you put it into an algo which sort of intelligently, sends small slices to various exchanges and slowly works the order so as not to impact the market. Mm-hmm. But there might be a price, for example, maybe it's a little bit above, let's say you're buying above the market price, right? Or even below the market price, where you'd be happy to get the entire order done, right? You'd say, if I can get the entire order done at this price, forget about working it across various markets. Let's just get it done here. It's called an I would price in sort of non-traditional finance. And I think in decentralized exchanges are very good candidates for sort of especially the ones that are more peer-to-peer, like the air swaps, where no one can really, you're not showing your block to the entire world. It could park these blocks in these sort of dexes, right? And it's working the order in the market, but if it can find a buyer for a big block on a dex, then it'll just get it done there. And this is an example. We have other ideas of how we think we can also sort of drive liquidity to decentralized exchanges. And just another area where we're pretty excited about. Which I think it benefits not just institutional investors, but the community as a whole.
Yeah, it's very interesting that you mentioned that part of the decentralized exchanges, because I've done a few interviews with founders of decentralized exchanges. Some of them have greater UX and they're moving forward on that, but they still have the liquidity problem.
Right. Yep.
And so then it's something interesting to know that you also have that in the scope.
Yep.
I think that we covered almost everything about Caspian. I don't know if there's anything else that we haven't said.
I can't think of anything.
So I think that what would be great is that maybe we can have a follow-up conversation in a few months once the whole token sale finish and you're already moving on to see how everything is going. And just one last question that I forgot to ask. Is your plan in the roadmap to start first with the crypto fund managers in Asia, or are you looking to roll out worldwide?
Not at all. No, not at all. If you look at our sort of our sales pipeline, as well as the clients who are using the system, they're actually divided almost equally between Asia, North America, and Europe.
Interesting.
So we've got, we have launches, clients using the system in all three, sort of geographic locations, and our pipeline, when we analyze it, it's almost, evenly distributed: a third North America, a third Europe, and a third Asia.
Well, that's very interesting. So also for all the guys that are listening to this that are crypto fund managers, just go to the website and contact Caspian directly if you want to start using the platform.
Great.
Well, thank you very much, Gerrit, for
thank you, Ryan. Appreciate it. Thank you. Bye-bye.
Bye-bye. Cheers, and bye, everybody. Bye-bye.
Thanks. Bye.